What is up, guys? It's Keith Trades. Today, July 30th, man. What a monster day, right? What a monster day. 2 for 2 calls yesterday, and today we are at a very beautiful 2 for 2 on callouts. Well, technically 3 for 3 on callouts, but today members didn't really capitalize on it. Again, I can't really control that, but let's get right into it, right? The market sold off 400 points from our trade, which is amazing. But let's get right into it, right? Very simple. Right, understanding that Monday's low of day here, we have swept previous day's low and found buying. Here we are at the 4-hour chart, and I see this 4-hour fair value gap. So my plan is very simple. If we respect this, we're likely to run out these equal highs and reprice to the daily fair value gap on this time frame. The daily fair value, we're likely to price to here. As you see, we failed to yesterday. Right, if we slide straight through this 4-hour, then my targets lie very simple. Pre-market low, Friday's low, and then Thursday's low. Right, these are your rough targets. Right, coming into the session. Right, nice pop, and we failed to deliver. Right, I ended up taking a small short set. My fault, not short, a small long scalp, but that worked out beautifully. Again, my narrative was very simple. Right, on the 1-hour time frame. Right, we have equal lows here. So I looked at the 1 minute and said, okay, equal lows have been swept here. And then we took out internal sell side here at this low. So I said, if we find a inverse, I'll take a stab long. Right, so this inverse fair value gap here on the 1 minute bearish. A very strong close above. It tapped back in. I got my entry long, and I targeted very simple, just this internal high. Right? A beautiful trade. 2 minutes for 29 points. Right, a beautiful setup. And then I zoomed out on the market. I zoomed out and I said, you know what? Market is likely to slide lower. Why? Right, number one, we have SMT. Right, if we go on the 15-minute time frame, right, look at this high, 10 o'clock high, and or 7 o'clock high. Both. On NQ, lower high. If we go to ES, this same 10 o'clock high, what do we do? Higher high. Right, see how we broke this high? So understand that ES broke this high, the 10 o'clock high from yesterday, and then NQ failed to. Here, we have what? Bearish SMT. And since NQ is the weaker of the pair, that means NQ is the better short. So what do I look for, guys? The same exact stuff. Understand that we have taken out buy side and we have taken out buy side again. And then what do we have? A clear power of 3, right? We see consolidation coming into the session open. Here's your buy side sweep manipulation. 15-minute market structure shift through this swing low. How do I know we displace? Look at where we closed. So where is my play point? I look for a 5-minute or a 15-minute fair value gap. Today we ended up having a 15-minute fair value gap play point here. Coming on the 5-minute, it looks a lot more clear. Right, power of 3. Right, SMT at the highs. Consolidation to market open. Upside manipulation. 5-minute market structure below this swing low and this swing low. Right, we're playing in 5-minute fair value gaps here. Never tap back in, but we had a 15. Again, our classic entry model, guys. This is the entry model, guys. This is my bread and butter. This is my A+. This is my golden. Right, 2 trades yesterday I broke down. It's the exact same setup, right? This is what makes money, and this is where I find consistency with the market. Right, very simple. Swing high here. Buy side sweep. If this was breaker structure, what would we see? Continuation to leave behind a bullish fair value gap. Never happened. So what do I look for, guys? A bullish to get inversed or a bearish to form. Today we had a bullish here, once respected. Inverse with a strong close below, and we also formed a bearish. Double confluence. Stop loss, candle that formed it. Price target 1 is this low on the day, opening range low, right, 7 o'clock low. And price target 2 is runners, right? Runners from where? I don't know, maybe Friday's low, maybe Thursday overnight low, maybe Thursday's low a day, right? All these targets. And as you can see, guys, from our short entry, market absolutely ran down 407 points, guys. Well, 404 points. And even then, I think we might have, slid even lower than that. Yeah. Which is crazy. Again, risk to reward wise, bigger risk, guys. 20-point risk, but you're netting 45. So 2 to 1. 2 to 1 risk to reward. And then runners would have minimum hit 100 points. Because I would say, you know what, I will probably take it out when I see my first green candle. So you probably would have catch 80 to 100 points. And then there was a continuation model to run lower. And then another run lower here. Right? And all the way downtown. Right? So those are the trades that I took today. Again, my inverse long scout for 30 points or 29. And then this absolute monster. Right, coming in, I called for a long reversal. Why did I do that? Very simple narrative. Understanding that market has took out sell side aggressively. Right, if we find a reversal model, we're likely to what? Reprice to discount and or reprice to a unfilled imbalance. Right, so as you can see, if we go on the 1 hour time frame, we ended up forming this downside candle, and this opens and we buy very aggressively. So I know I see this buying, we're likely to price to what? 1 hour fair value up here. And why is my narrative finally said, okay, we can run higher? Because if we zoom out on Thursday, or even maybe in the 4 hour farther back, right? This is the last recent low that we've had from the sell-off. So I said we've taken out the last recent low from the sell-off. If we find a reversal, we can reprice to where? 1 hour fair value gap. Right, and let's go into my calls. Right, again, I don't really do much calls for the fact that this was traded live. Right, but a very simple setup, guys. Right, I called out 18,973 1 hour fair value gap price at 10:37 a.m. Right, so I ended up calling that here. Let's get a timestamp in there. 10:37. This is where I called for the long model continuation. Right, so where are your points of narrative, right? Narrative 1 to reprice to the 1 hour. That's why I called 18,973, right? 18,974, same thing, right? Reprice to the 1 hour. Right, confluence points, 15-minute time frame. Right, if we were to run lower, we would see what? We would see this bearish 15-minute fair value gap, right? Draw back in respect to run lower. But what did we do? We ended up closing above inversing that fair value gap and simultaneously tapping back in and respecting it as inverse, right? Zooming in on the 5-minute, right? What do we see? A not very clear 5-minute market structure shift, but we see this 5-minute fair value gap gets inversed and it respects, and we see this 5-minute fair value gap get inversed as well and respect. So now I could say, okay, we're respecting bullish inefficiencies, we're sliding higher. Okay, now it's time to look for longs to a price to the 1 hour. And my first call out for the longs came in on a 2-minute fair value gap. Right when we closed above aggressively, right, this was my play point here. Stop loss, very simple, wick low. Coming on the 1 minute. Right, again, we called out the longs at 10:37. We called it out this candle. 1, 2, 3, 4 minutes later, we got our entry point. Right, a 19-point stop to make 53, 54 points. Very great quality risk to reward. And that is what's going to cap off the day. So guys, right, we went 2 for 2 yesterday and then 3 for 3 today. Right. So that's going to push up our win rate. Right. Let me check my phone real quick. Let's see where we're at. We are 27 for 31, guys. 27 wins to 4 losses. That is great quality stuff. Right? And we'll continue on. But that's going to wrap it up. Thank you guys for watching this in-depth analysis. Leave a like, leave a comment. Be sure to ask questions. And I look forward to seeing you guys in the next one. We will be taking FOMC off tomorrow. Have a great day, guys.